Hello everyone, welcome back to this week's Technical Insights. Last week, we had a shorter trading week on the US market due to the Thanksgiving holiday on Thursday, but that did not stop the Dow Jones Industrial Average and the S&P 500 Index to close at an all-time high in a shortened trading day on Friday. The S&P 500 rose 0.56% to close at 6,032 points, while the Dow Jones Index increased by 0.42% to close at 44,910 points. The Nasdaq Composite Index, meanwhile, advanced 0.83% to close at 19,218 points. Consumer discretionary stocks and technology stocks led the gainers among the sectors, while financial stocks closed little change. Some of the upward momentum came from semiconductor names, which jumped after Bloomberg reported that the Biden administration was considering additional barriers on the sale of semiconductor equipment to China, but that wasn't as strong as previously expected. Lam Research rallied more than 3%, while Nvidia also rose 2% last Friday. For the week, the Dow Jones Index added 1.39%, bringing its monthly gain of November to 7.5%. The S&P 500 and the Nasdaq Composite rose about 1.1% each for the week, ending November higher by 5 and 6% higher respectively. With those monthly gains, the Dow and the S&P 500 notched their best month of 2024. Fed Fund futures are now pricing in around a 66% chance that the US Fed will lower interest rate by 25 basis points at its policy meeting on the 18th of December, according to the CME FedWatch tool. This will help further raise the present values of future earnings, and that should boost the US economy in the near term. In Asia, Hong Kong stocks finished slightly higher, cheering the reports that the impending US restriction on Chinese semiconductor industry may be less severe than expected. On Friday, the Hang Seng Index rose 0.29% or 56 points to close at 19,423 points after tumbling in last Thursday trading session. Meanwhile, the Hang Seng Tech Index also rose 1.06% or 45 points to end at 4,353 points, amid a potential softer than expected US curve on chip equipment sales to China. On the week, the Hang Seng Index rose about 1.01% and the Hang Seng Tech Index followed suit, jumping 2.53%. For the month, Hong Kong markets logged their second straight decline, burdened by the increased concern over the impact of persistent trade dispute between Beijing and Washington. Hong Kong investors are now eyeing the December Central Economic Work Conference, which could provide more details and insight into the fiscal budget and scale of stimulus for consumption in China for the next year. It remains unclear whether China will roll out new policy measures to support the weak economy as the year-end approaches. This meeting will be focused on the short term, and the market performance will likely fluctuate around the expectations. Top gainer on Hang Seng Index last Friday includes Galaxy Entertainment up 4.4%, Semicon Manufacturing up 4%, and Li Auto up 3.8%. Back in Singapore, our STI Index ended the trading week on a slightly positive note. Our benchmark index was up just 2 points or 0.05% last Friday to close at 3,739 points. For the week, we lost about 6.7 points or 0.18%, recording the first negative week in 4. Year-to-date, our STI Index is now up 15.4%, and we are now within 6% of its all-time high of 3,906 points set in October 2007. Currently, STI stock valuations are significantly less stretched than October 2007, with the current STI price-to-book ratio at 1.3 times compared to the 2.5 times in October 2007. Our three local banks, which also constitute more than 50% of the STI weightage, have also benefited from the delay in rate cuts this year, and average close to a 40% total return in the past 11 months. MS Economic Review in October also communicated that Singapore financial sector is anticipated to benefit from increased trading activity and a pickup in credit demand driven by global easing of monetary policy. The top performer on the STI Index last Friday was Singtel, whose share price jumped by 1.64% or 5 cents to $3.10. Singtel has been among the 10 best STI performer in the second half of 2024, with a 19% total return, taking their year-to-date total return to 32%. Singtel also booked the most net institutional inflow this year across the Singapore market, while also seeing its daily trading turnover almost doubled to Sing dollars 94 million from 50 million in 2023. Based on 18 analysts covering Singtel stocks in the past 3 months, 13 of them had issued strong buy calls with the target price from $3.37 to $4.60, with the estimated 12-month average target price around the $3.73 level, representing a possible 20% upside in the next 1-year period. So for this week's technical analysis, let's take a look at local telco giant Singtel. Last Friday, Singtel share price jumped 5 cents or 1.64% to close at $3.10. Looking at the chart of Singtel, we noted that Singtel share price has been in a predominant uptrend, especially in the second half of 2024. Singtel share price rose from a year-to-date low of $2.29 on 14th of February to a year-to-date high of $3.41 on the 19th of September. Recently, on 1st November, you can see that Singtel share price dropped to a low of $2.90 over here before rebounding strongly to a high of $3.26 a week later. This may indicate the presence of strong buyer around the $3 mark over here. The current Bollinger Band reading shows that the upper bound of the Bollinger Band is at the $3.27 level, and the lower bound of the Bollinger Band is at the $2.99 level, lending support that the sub $3 level will likely see support coming in. Looking at the indicators, the MACD is showing that the recent downside momentum in the past 3 months is subsiding as the MACD line is converging towards the signal line, leading to a smaller negative reading on the MACD indicator. The latest RSI reading is at 46 points, 4 points away from the 50-point neutral mark, and have also rebounded from last week's low of 35 points on the 26th of November, and is now above its 14 days moving average at 43 points, indicating that uptrend momentum is also recovering. With both the MACD indicator and the RSI signaling that Singtel share price may continue the rebound from last Friday, the first resistance level could be seen at the blue line over here, which is the 50 days moving average, now at the $3.18 level. The next resistance will be the recent high on the 8th of November at $3.26, which also coincides with the upper bound of the Bollinger Band at $3.27. Support for Singtel share price will likely come around the $3 level, with the Bollinger Band showing the $2.99 level. The lower bound of the Bollinger Band could likely become a support for Singtel share price. And these are the updates that I have for you this week. I hope you do find this information useful. So do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.